Neil, the U.S. economy has lost hundreds of billions of dollars the past few weeks. How? The Fed has lowered its final numbers for 2010 fourth quarter from 3.2% growth to 3.1% growth. And now the consensus from economists are for the first quarter of 2011 of growth of only 2.4% from 2.8%. They're blaming bad weather, slower construction costs. They're blaming higher energy prices, all this sort of stuff. I just happen to think that they overstated the prospects of the economy to begin with.
Well, I assume you blame President Obama for all this, Mike, but beyond that, I think there is some reality to, obviously, when we're talking about oil in excess of $100 a barrel, that's a headwind. Japan and all the problems that Japan is having and what that's doing to the world supply chain, that's a headwind. But I think the biggest headwind here is the fact that we've been on steroids. We've been the Barry Bonds economy for the last few years, and now we're starting to have to come down.
Right. I think what this points out, Neil, is exactly that. The TARP program was a failure. The largest banks are bigger now than they were before TARP in terms of market share.
But you don't know that it's a failure because we don't know what would have been without it.
Housing, it's in worse shape now than right after the crash. And guess what? Consumers aren't feeling any richer. I think what all this shows is all this money printing and government intervention has failed to do much of anything for economic growth.
Well, I'll finally say this, and it's that while we're feeling some short-term pain right now, Mike, I think there may be some long-term gain here, because I think if you look at the long narrative arc that we're on, we're seeing that there's some sanity is coming back into this economy. We're starting to talk about fiscal sanity. Amen.